Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, January 8th. Happy New Year! Wall Street opened higher today as Chinese stocks recovered after their bad week. Oil prices clawed back and the jobs report showed robust growth in the United States. Non-farm payrolls surged in December and the unemployment rate held steady at 5%. The upbeat report suggested that a recent manufacturing-led slowdown in economic growth could be temporary. As you know, this market has been volatile all week. It got off to a negative 4-day start this year. We had headwinds from North Korea, China, and economy slashed fourth quarter U.S. growth estimates. So far today, the S&P 500 shows no new 52-week highs. We have 6 new lows, while the NASDAQ recorded 4 new highs and 38 new lows. Now let's go on to some charts that could give us some insight into the week to come. First of all, we have our chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that tracks our benchmark index, the S&P 500. As I captured this chart right now, this daily chart, the SPY is trading at $194.28, or about $19.42 on the S&P 500 index itself. It is trading below at quite a discount to its 20-day moving average, the red line, 50-day moving average, the green line, and 200-day moving average, the black line. Also, we can see here that the SPY has made a series recently of lower highs. Of course, this is negative price action. It means buyers are not willing to pay a higher price for this vehicle right now. And certainly this week, it made a pretty darn big move down, again trading now excuse me, at 194. We do have support here, if I could draw a straight line, at about 194 or 1940 and change from earlier in 2015 in the fourth quarter actually. The line we're worried about right now is the support from back in August and October. This comes in at about $187 or $18.70 on the S&P 500 itself. If you look at a longer term chart, you'll see that it is important for the SPY to hold 187. This is key support, and should it drop below 187, we may, over time, have to look at a measured move down that would take it to about 160. I'm not saying this is going to happen. The whole thing may not happen, but that would be the measured move down. Conversely, fingers crossed, it would be nice moving into this earnings season, which we're doing now, fourth quarter earnings. It would be nice to see, of course, the SPY hold here around 194, 195, and then work its way back up to 200 and higher, hopefully on the heels of some good earnings reports. But keep these levels in mind as we move into next week. Our next chart today is one I don't think we've looked at in quite a while. This is the iShares Large Cap China ETF. As you know, the Chinese stock markets have moved down pretty dramatically in the last week and indeed since the middle of 2015. So this is a monthly chart where every candle represents 1 month. Sometimes it's really beneficial to look back at a bigger term picture. We can see how from its big fall in 2008 that probably every market took on Earth, from 2009 through 2015, this market has been pretty well controlled, actually trading in a range here between about 30 and 45, 48. It moved up pretty dramatically the beginning of last year, then fell hard, and is now, as I copied it today, of course, this is only the first week in the year. It's certainly not representative of the first month yet. But still, in looking at it, we can see right now the FXI Large Cap China ETF is trading at $31.89. It has some pretty decent support down here just at 30 and just under it. So as it is affecting our markets and global markets dramatically, keeping an eye on the FXAI may be wise. You want to put a potential support line between 29 and 30. If this 29-30 line breaks, the line you see on this chart, then potentially it could move down to about 24-25. And that will affect global markets. So let's keep an eye on the FXI. It's a good barometer to be aware of. Finally, we're going to look at what's been all in the news for us recently. That would be energy and oil. As China moves down, so do oil prices. To a degree, they go hand in hand. Of course, we have a very large supply of oil on the planet right now. We're looking at a select sector energy ETF monthly chart, symbol XLE. We know that energy, along with everything else, fell in 2008, then started rallying in 2009. This equities ETF, the top components are companies like Exxon, Chevron, Schlumberger, Halliburton, National Oil Well, Varco. You know that group. I think there will be some fantastic opportunities here when the energy sector reverses to the upside. We just don't know when the when is. The XLE in 2014 was trading up just over 100. As you can see, as I captured this chart today, it was trading at $56.19. We've had a big down move on strong volume in 2015, meaning traders weren't kidding around. They're selling this move, and this is on the back of oil prices. Now, however, the XLE on a monthly chart is getting oversold. The MACD is still heading lower, no kidding around about that. But we can look for support right here at 56, not to buy here, just to mind it. Then we can look at more support, straight line, Tony, at 50. So we've got 56, 50, and even 40, which is key support down here as well. 40, 56, key support levels. And we're just going to have to watch and wait and see what takes place here. But if we do see a reversal, remember, an uptrend consists of higher lows and higher highs. So we'll want evidence of that, at least on a daily chart, before we participate on the long side. But at some point, there will be some nice opportunities here. So we are going to stay tuned. Now we'll go on to next week's economic reports. We don't have too many economic reports this week. On Wednesday, we have our usual crude inventories and the Fed's Beige Book. Thursday, we have our usual weekly jobless claims. Friday, we have the Empire Manufacturing Index, the Producer Price Index, retail sales, and the Michigan Sentiment Index. Until next time, keep green on your screen. For Weiss Educational Services, I'm Toni Turner, and this is The Market Now.